Everybody, Michael Silva here. We are going to be going over the price of gold and gold miners to determine whether or not right now is the best time to get in. First off, we want to pull up this chart of GLD. This is a gold spider chart here. And what I want to call out here is as of recently on July 7th, July 8th, we recently had what's known as a golden cross. This typically, what this does is resembles a change in trend. Okay, so it's nothing to hold this high level standard on, but it is something that we need to be aware of. We had what's known here is when the 50-day moving average crosses below the 200. This is known as a death cross, and when you cross it, we could see some price action that went down, and then it quickly then recovered shortly after. So perhaps we're starting an early trend change. Now, what's important to note on shifts like this, pay attention to where the price action is right now. The price action is actually below both the 200-day and the 50-day moving average, and the 200-day is currently sloping down to sideways. What would be nice to see is if the price action could recoup this and stay above there for approximately 2 days. If you stay there for around 2 days, chances are the third day, it'll probably stay above there too as well. So we're not quite there yet in the price of gold. One thing that I also want to call out is the possibility for this technical pattern to be a head and shoulders, an inverse head and shoulders, I should say. So if I go ahead and draw a neckline like so, and then I'll bring out and show you what I mean by a head and shoulders. We'll draw in the head and the shoulders here. You can see left shoulder, a head, and a right shoulder. Now, if you were to measure this out and this were to break out, what you would want to do is take basically the neckline from up here and measure it down to the head, and when you break through the neckline, it can result into a move to around, let's say, 200. So if we are watching this neckline, a full measured move of this certain technical pattern could bring gold above the previous all-time high here and take us to around 200 in the GLD. A couple things to note out too as well is you can see on these moves strongly to the upside, which is this neckline, and even down to the lower portions of these shoulders, you can notice the volume profile. They have these selling climaxes. You can see right here when it poked right here at the top of the neckline, we had this big spike in volume. When it came down here, we had a selling climax, a big exhaustion bar right here. So a big move right there to the downside, and it typically reverses. Right here, you can see it came up. Big spike in volume to the downside right here. You can see also a big spike in volume right here. Was not a big spike in volume, but you can see here on the move to the downside, we had this big exhaustion type move with a lot of selling. So this is a selling climax, which tells me that there's a possibility, yeah, we might doodle around here a little bit longer, but this does suggest potentially that the price of gold here is basing out. But like I said, it's important to wait for some confirmations here. We'd want to get the price back above these moving averages and hold there for a few days. So it'd be nice to see the price of GLD get back above 172 and then start to hold that. And then we'd be paying attention to this neckline. Let's take a look really quickly at the miners. So here is the GDX, and very similar, you can see a pattern that's forming. We can call this as well an inverse head and shoulders pattern. You can see there's the neckline, and if I were to draw in the shoulder, there's the left shoulder, you have a head, and then you have a right shoulder too as well. The last trading day, you can see there was quite a bit of selling activity. The day was down 3%, so a pretty big hit to the downside, and we had a pretty decent size volume bar coming in there saying that volume was stepping up. However, like I said, we had a golden cross here on the miners as well. The price action's been below it. So you want to see the miners, the GDX, reclaim those levels and start to hold there for multiple days. If we start watching a breakout of this neckline, that could represent a very good time to get back in the miners. Where can the price potentially go for miners, especially if it breaks out? It could be right around $50 on a full measured move of this inverse head and shoulder breakout. This right here is a sentiment index. Sentiment is rather bearish as of right now, and when things are very bearish, you can use this as a contrarian indicator. When it comes to these low levels, it typically represents that the contrarian trade is to the bullish perspective. Vice versa, if it came up to the upper side and everybody was extremely bullish, well, then the contrarian trade would be to be a little bit more bearish. And this has been a good indicator. And as its readings currently stand as of right now, this does suggest that we could be running into a bottoming type pattern. There's always a possibility for some sort of deflationary impulse. So it's best, like I said, to wait for confirmation. But this sentiment index does suggest that we could be finding a bottom here in the price of gold. Today's video was brought to you in partnership with both First Mining Gold and Treasury Metals. At the depths of the gold bear market, when gold companies were shutting down operations, turning the lights off, and handing their keys to the landlord, Keith Neumeyer was like a hunter during game season. Along with his team of mining experts, they constructed a watch list of the best gold projects they'd love to get their hands on. Investors at the time were cautious of supporting entrepreneurs in the resource sector. In contrarian fashion, Keith Neumeyer, the CEO and founder of First Majestic Silver, the world's purest silver company and one of the largest mining conglomerates listed on the New York Stock Exchange with a market cap of $4.5 billion, decided this was actually the ideal time to consolidate the watch list of gold projects into one new company at liquidation-like prices. The result was First Mining Gold, a company that had acquired a number of world-class gold projects in Canada. One of the company's top-tier assets is the Goliath Gold Lund Gold Complex, which is being developed by their partner on the project, a company called Treasury Metals. First Mining received approximately 43 million shares and approximately 11.7 million warrants of Treasury Metals when they sold the Gold Lund project to Treasury Metals. When you conduct your due diligence on First Mining Gold, you'll notice that this is one of the cheaper gold developers out there. As you can see on this slide, First Mining's valuation is discounted by 80% compared with the average gold developer and by 84% in comparison with advanced gold developers. First Mining's share price would actually need to rally by 400% just to be average. This begs the question of what could cause a re-rating in the company's market cap, and the answer is in their project Springpole, one of the largest gold development projects in the world, which currently has an NPV of $995 million, even though First Mining's market cap is only at $216 million. As you can see, recent mergers and acquisitions in the Canadian gold sector have been completed at anywhere between 0.6x and 0.9x NAV. If we are very conservative and assume that First Mining Gold receives its environmental assessment and advances the Springhole project to the point of having it mined already, with the NPV being at $995 million, the 0.6x calculation values it at $600 million, which is 200% higher than First Mining's share price today. Now, if First Mining Gold didn't have $40 million in cash and liquidity, if it didn't have multiple assets and partnerships such as Cameron, Pickle Crow, Hope Brook, and others, if it didn't hold shares of Treasury Metals, Oteka Minerals, and Big Ridge Gold, and if it didn't have a robust royalty portfolio and just had Springpole to its name, this would still imply that today's market cap is 66% below 0.6x NPV alone. First Mining Gold is at a point in the company's life where the de-risking process has resulted in value-creating advancements for the company. First Mining Gold's portfolio of established gold resources in Canada remains a unique strategic asset which few companies own, and that will not change. The mere fact that First Mining Gold is fully funded to achieve key milestones, having just attracted significant institutional investors to the company in its latest 28.7 million Canadian dollars in financing. That is a testament to the share momentum created in the past year, as 3 key transactions have been inked on 4 of its 6 key gold projects: Springpole, Gold Lund, Hope Brook, and Pickle Crow. The company's initial strategy when it was still private in 2014 and 2015 was constructed by the founder Keith Neumeyer himself. It was all about buying the best gold properties available in the depths of the bear market in order to capitalize on the worst sentiment and the ideal distressed conditions which prevail in those years. The strategy proved itself since among Springpole, Goldlund, Hopebrook, and Pickle Crow, along with its other gold assets, the company has amassed an impressive asset portfolio of gold and silver resources for prices that are far lower than today's. The third asset that is rapidly getting de-risked is Pickle Crow, which is currently being drilled by Teco Minerals and again is receiving little value, even though there's a 45,000 meter drilling program underway at the high-grade gold project that has big potential. Teco Minerals is a very talented exploration team with a proven track record of finding high-grade gold in past producing gold camps. Their previous success is Bellevue Gold, which Steve Parsons and Sam Brooks took from 0.3 cents per share of stock to 80 cents in 4 years by executing the same game plan in Western Australia. A couple other important highlights for Treasury Metals is this. The mine is believed to return all upfront cost in just 2 years once it's in production. The management team was reorganized last year to include experts in developing this massive gold project. The NPV, the net present value for their project, is north of $300 million, but their current market cap is below $100 million. Their share price has fallen by around 53% since August of 2020, which was the peak for gold. So the shares are starting to look a little bit more attractive here. All right, everybody, that's all I have for you on today's episode. If you want to find out more information about First Mining Gold and Treasury Metals, there is a link in the description to their websites. Have a wonderful day.